initiative to foray into the real estate space with the launch of Raymond Realty, and is now constructing a mammoth project of over 4 million square feet. And there's, of course, a lot more we can discuss with him. So Gautam, thank you so much for being...
Thank you, Gautam.
Yeah, before you guys get confused which Gautam is talking to which, especially the guys on Zoom. But anyway, thank you for being on our leadership series. To start with, I'd like to congratulate you on two fronts. First and foremost, your last quarter results were the best ever in the history of the company. So that's great. And second, and more importantly, Raymond is now part of the $1 billion market cap club, which itself is a big achievement. I want to kick it off with, I guess, a question which most people have come back to me with is, the world has endured about 2.5 years of COVID, a once in a 100-year event, and hopefully we don't see it at least in our lifetime again. How has the Raymond Group survived that? And in particular, what were the main challenges you think you faced?
So thank you, Gautam. I think, yes, COVID was an incredibly difficult time for everybody. But Raymond got particularly affected because on one hand, there were no sales. On the other hand, you're carrying a large manufacturing base of people. And we sort of got squeezed in the middle. But then kicks in your art of survival and your will to survive. And we probably did everything possible. And I think the most important thing we did is that we cut our costs dramatically. And we had a strong will to come out of this. I think it gave us a great opportunity for a business reset, because when it comes to survival, then you have to look at any way of surviving. And we cut costs. We thought of new ways of doing business. Who would have thought you could have run an organization like this on Zoom? But we did it. And, you know, we hit lots of rock bottoms. And I think one of the biggest challenges was when our apparel business hit rock bottom in the peak of COVID. And, you know, we tried to sell everything that there was to sell, but, you know, when you're down, people want to pay you even less than the cost. And then we set up a task force to monitor each business weekly. And through COVID, I remember I said, I'm going to travel. I started to travel. I met maybe 1,000 dealers, distributors, vendors, and reinstilled confidence in them. And, you know, all I can say is that today you're seeing a business much stronger than you've ever seen before. You've seen 4 quarters of great results. And we decided to keep our head down and not talk to anybody till we were able to get our act right. And I'm happy to say today, you know, in hindsight, it was easy. It was difficult, but, you know, we've got a long runway ahead.
What changes do you think that are more permanent in nature and that you think will endure beyond COVID as far as the group's concerned?
Well, I think it's just the way we do things. I think one, the huge cost reset we did is here to stay. Yep. It also taught us, because of some issues we had on stricter governance, getting the best people to work for this organization. So if you see over the last 3 years, we built up a very strong team. And most importantly, I think the most important thing we built in the last 3 years was a real estate business. Yep. We built it, we started in 2019, we're in 2022, delivering 2 years ahead of RERA. And on 10th of December, which is next Saturday, we're actually going to deliver 900 apartments.
Fantastic. The one thing you touched upon right now in your reply was with respect to getting on more professionals. And I think what I've seen over the last 2 decades of being in the financial industry, and a lot of the people from the funds who are either on Zoom or in person have seen this, where family-owned companies have tried to professionalize management. Tell us about your experience that you've had and the new team that you brought on board. I think a lot of us would like to learn more about that.
So yeah, you know, you and me have spoken about this in the past. It's not that you get it right the first time. So we also got it wrong the first time. There were issues, and then we got hit double by COVID. But I strongly believe on a philosophical level that if you commit yourself to doing the right thing, then, you know, that rolling stone will gather the moss. And if you commit yourself with a vision of what you want to do, of professionalization or strategy or whatever it might be, then it'll all come together. And I think that's what's actually happened at Raymond. Uh, I was just with another investor who is just like, I said, you know, the proof of the pudding is in the eating. If you are selling apartments, that means you're making the right product at the right price in the right place. If people are joining this organization after leaving jobs for 10 and 15 years in other companies, either they're going to kill me because I gave them a wrong story, or they're happy. And I think they're happy.
Great. I think if I look at the Raymond Group, and again, perception on the street is you're primarily, it's starting to change, but I think still people believe it's primarily a textile and apparel company. And I'm looking at some of the facts here, which are staggering. 120 million meters of annual capacity, 30,000 people employed, 2.3 million square feet of retail space across 600 plus cities and towns, which is, I think, a mammoth network as is. I think there are some very interesting businesses that the market's not fully appreciating or hasn't fully understood. And I think you mentioned real estate, and you've given some statistics which are quite fascinating. But I think if we can talk a little bit about FMCG, engineering, I'd like to get your thoughts on those.
Yeah, I mean, perception is such a thing. Nothing succeeds like money. So the more money you make, the more successful you'll be in life, period, no matter what you do. But if you talk about FMCG, our FMCG business is doing well on the back of Park Avenue and Kama Sutra. And I don't think many people realize that between Kama Sutra and Park Avenue, we're the largest sellers of deodorants in the country. If you take engineering in the Ring Plus Aqua, we're amongst probably the largest in terms of production for ring gears. We're the second largest in terms of capacity, but that person is running at a lower utilization. So we actually make more ring gears than them. If you take the engineering files business, we're probably largest in the world in that business. So I think all our businesses are doing with God's grace well and also growing. So you're seeing the numbers today. If you take the engineering business, the return on capital employed in that business is about 50%. Now, these are things that people don't really know. And I think the most important thing, Gautam, we talk about is perception. I think, you know, when it's a large ship and it starts to turn, it takes a little while, but once it's turned, then the momentum will really go, you know, take you through.
It's interesting that you mentioned that you're delivering on the 10th of December, 900 keys. I believe this is 2 years ahead of schedule, of RERA schedule, should I say, which is remarkable for somebody who 3 years ago was not in this business. So, you know, I want to understand what on earth did you do what's the team like? How did you possibly execute this? I mean, I guess all of us want to know, how have you done this?
I think sometimes it's called ignorance of the business. If you don't know that how to do the business, then I think a little bit, to be honest, the stupidity that, you know, this can't be done is why can't it be done? Of course it can be done. And you don't come with any luggage. You don't come with any back-end thought. And I think I've got a phenomenal team who's delivered on this crazy vision. It was last year in January that we said 10th of December this year. I did a calculation. I said, you know, you got 30 slabs to go. It'll take you a week, a slab, blah, and we do it. I didn't realize, and maybe to my good fortune, of what actually went into doing it. But I must congratulate the team that, you know, they put their heart out. We actually set our targets first and then find a way to get there. And we put a countdown timer on our website last year, which is counting down to 10 December, 10 a.m. And we made it public, and no other developer in the world has probably done it. And now, having made it public, it's my reputation on the line. You know what? It's my reputation on the line. I will deliver.
So then where do you go 3 years, 5 years from now, specifically on the real estate business? Because it's Thane today. What's next?
So we're looking at this joint development model. And, you know, I love what Modi ji said one day when he used this, and he said, whenever you see work in progress, it says, Mera Bharat ban raha hai. And ye Bharat ko to banna hai. And there is so much opportunity out there of what has to be done. I mean, every time I look out of my window from upstairs, from the terrace, I look out and say, hey, raw material. Because India has to be built in every building in the city. I mean, you hear how many conversations. Today, I can guarantee you one thing, that there's not a single person in South Bombay that will get the quality of life that we will deliver in Thane. Because it's a new build. It's got 50 different facilities. A guy buys in at 70 lakh rupees into my apartment, And he's getting a tennis court and a squash court and a Priyadarshini Park and a Taj Chambers and a Wellington Club all put together. The lobbies that we have designed, which are 26 feet high, there's no building in Bombay that has a 26 feet high ceiling because it's all been built 50 years ago. So the quality of life that you're going to get into one of our projects is going to be far better than anybody could ever dream in. And the price you're going to buy in at is unbelievable. You can buy a 1 BHK. The starting price used to be 70 lakhs. I think it's gone up a bit now. But we're building India 1, 2, 3. And 1, 2, 3 means 1 bedroom, 2 bedroom, 3 bedroom. And that's where the belly of the market is. That's where Raymond operates. Its fabrics go to the belly of the market, the middle class. And that's where this demand explosion is going to happen in this country. And that's where we are.
You know, that's interesting you mentioned that, because the one thing that I've seen that you being fanatical about is the Raymond brand. And if you're going to put your Raymond brand onto real estate, I'm sure you're going to make sure that the quality that you deliver is the best, and it's in line with your apparel, in line with your textiles, and the experience that a home buyer should have should be exactly the same. But how do you control that if you were to go beyond Thane and if you take on, as you take on more projects?
When we take it on, listen, buying a home is a very big emotional decision. It's not customer satisfaction, it's customer delight. Today, moving into a new home, you've done it, I've done it, is a very, very emotional moment. And Raymond is an emotional brand. If you do the reports on Raymond, you test the brand, the one word that comes to the top is trust. Now, if I'm doing a JD, I have 100% control on the project, or I won't do it. If I bring the Raymond brand to that project, then I'm 100% in control. There's no negotiation on that. There's no, one of the largest developers in the Middle East wanted to tie up with us. I won't take a name, but you know about it. And then we were going to do an exclusive India tie-up. And then he went back to the board, and the board said, you do it with Raymond for Western India, you do it North. I said, how would it look? X, which is his name, Raymond here, and X Godrej there, and X Palanji there, and X. I said, it doesn't work. And we let this massive developer go because of the sensitivity of the Raymond brand.
Fantastic. Just to segue into something which again is, I think you're passionate about and is natural to Raymond's, is your foray, an aggressive foray into ethnic wear. Tell us about that.
Mama ji aa rahe hain.
I'm sure what you know what he's talking about, right? What Mama ji aa rahe hain.
हमारे घर में तो मामा जी कोई भी कपड़े पहन के आए तो वेलकम है.
Fantastic. No, but okay. What are your plans? How many stores? I mean, again, I don't want you to give forward-looking statements, but again, I think your strategy, sticking to the complete.
Raymond is doing multi-product lines. Ethnic wear is a one that we should have done 5 years ago. I mean, very candid. But now, is there a runway there? Somebody's created the market. Of course, there's a runway there. It's a no-brainer. I mean, we did not open as many stores as we should. It's an opportunity for us to do it. Nobody else can do it. They've reached 95% of the market capacity. We are 30% of the market capacity. I can go only up. He can come only down. And that's what's going to happen.
Fantastic. Your garmenting business, and I think the high value cotton business, I noticed that combined revenue was just shy of 500 crores for the last quarter. Again, a lot of that is not fully appreciated by the market. And I don't mean necessarily the market and not just investors, but I think in general, people don't know how big those businesses are. And I believe there's a lot brewing in that space. Can you share a little color on that, please?
So GD, I mean, the fundamental problem is we need to believe in ourselves. Every company abroad, when they look, if you're sitting in a boardroom in America and you look to the East and say, I want to manufacture in the East, what do you see? You see India and you see China. Now, these boards are saying we are fed up with China because of all the issues we know. Go find another country. We've got 3 very large customers who have come to us, Marks & Spencer, Uniqlo, and Hugo Boss, in the last 6 months. This Europe +1, not China +1 anymore. They need us more than we need them. We don't have capacity to give. We're actually going to expand our garmenting capacity by about 75% over the next 2 years, because this fundamental shift has happened. You're not even equating on top of this what damage the Europe is and countries like that are going through because of the energy crisis. They have a labor issue, they have an energy issue, they have issues. And this is the time for India. You have two advantages. You have competitive manufacturing, but if you look, any company that becomes of a large global scale has to have a very large domestic market. And if you see sector after sector, where are the largest telecom companies in the world? They're in India because of the market. Largest textile companies in the world here. If you see even aviation, we are buying more aircrafts than any other country in the world. So this is the time for India. We're going to build more hotels in this country. We're going to build more infrastructure, more roads, because we don't have it. And that's your opportunity. And as the services sector develops, etc., Raymond will just piggyback with this. We positioned ourselves for that.
I want to quickly move on to your balance sheet and ask a question with respect to debt. You've successfully been able to halve your debt over the past couple of years, especially during the COVID period. Are you comfortable with your debt levels? Where do you see this now?
You know, your debt to EBITDA is less than 1, which is very comfortable. Your net debt equity is 0.5, 0.6. We're very comfortable. But the market likes to see a zero debt company. We're not in any stress to get there. You want to be a comfortable company, and if there are opportunities, we don't want to lose the opportunities just to become zero debt. But having said that, in its natural process, you will become zero debt without taking any actions.
So if I were to summarize based on what you've just shared with us, you're looking at real estate obviously being a much bigger business than what it's already today. It's big as it is, but it's now going to get even bigger because you're going beyond Thane, you're going for JDAs, asset light. You're looking now at the ethnics market, and we've seen another company which has got a crazy valuation. Best of luck to them. And point being that from an opportunity standpoint, you've very clearly said that this is where you'd like to go after. And then I think I think you answered my question and my confusion rather over your garmenting business, the export side, some very marquee customers. So what else do you think can happen with Raymond? What are the other areas of opportunity that you see, whether it's within FMCG, whether it's other branded products within the system?
See, I think we already got our hands full. And I think companies that take on more and have a greater ambition than the delivery capabilities are companies that fail. I think we're going to take one step at a time, but every step has to be a sure step. And today, it's very easy to get carried away with euphoria that, oh, everything is great. Tomorrow, if Putin drops a nuke, man, you'll be sitting here scared out of your wits because everything will come to a halt. So, take a step, consolidate, take another step. If you want to go up, the faster you go up, the faster you'll fall.
One last question from my side. And again, we have some women in the room, and a lot of women have signed up on Zoom. Will Raymond ever get into the women's segment?
It's complicated. So we've stayed away from it.
Great answer. So we're now going to open it up for Q&A. I think please limit your questions to strategy, vision. We're not getting necessarily into financials or forward-looking numbers, but please go ahead. We'll start off with the audience right here. Anybody has a question, please raise your hand and we can pass around the mic.
Hi, Satish from JF Mutual Fund. I've been following your company for quite some time now. Just want to understand in terms of your incremental capital that you get in terms of cash flows, which areas would you want to allocate that capital? Because you have garmenting as a business, you have toiletries and cosmetics as a business, and then you have the engineering as business, and you have.
So currently, we don't need much capital in most of the businesses. I think what we're looking, the only place you're going to build capacities is going to be in the garmenting business because there's huge demand, huge potential. So I think some capital will go there. And I think capital will go into the real estate business, but it's also coming out of the real estate business because there we see huge growth opportunities. So apart from the fact that we've reduced our debt, which you have seen, there's no great need for capital today.
So your businesses won't need capital. What would you do?
Today, so we're now working on the strategy on how to deploy the capital or what to do with it.
Okay. And what about the denim business and the fabrics business? Because they're much more capital intensive.
So like I said, we're at the end of our CapEx cycle.
Okay.
So we don't have to invest in any more capacities. Anything we will do now will come from outsourcing. So we want to slowly move to a more asset-light model.
Fine. Thanks.
Thank you. There's a question there. The mic there.
Hi, Rajesh Baheti here. A few years ago, you had a premium brand by the name Manzoni. Maybe that was, maybe that was before its time then, but now don't you think it's time to get a premium brand which competes with the likes of—
Is Raymond not a premium brand?
I mean, Raymond also makes,
No, see, Raymond is
so what went wrong with Manzoni? Let's put it the other way.
Manzoni was way before its time. And number two, the more brands you have, you start losing focus. Today, the Raymond brand goes from 300 rupees a meter to 10 lakh rupees a meter, 3,000 times in price point. I can guarantee you we make better products than any other guy in the world. Today, you can buy a Super 250 suit here, which none of the top brands can give you. And as a holistic brand, we give you far more than anybody else. I'll explain something on a simpler note. If you buy a product for 100 rupees in London, or you buy a product for 100 rupees here, the component of marketing in is 100 rupees far higher than the component of marketing here. And you know what? You can go to Hugo Boss, you're going to buy the same shirt made by me, so you might as well buy it here.
And also save the country some foreign exchange.
Hi, Gautam. My question is more on consumer trends. One of the things we've noticed coming out of COVID is that people have got more and more casual in their approach. You think that's a secular trend? And if that is, and how, coming primarily from a suiting business, how do you position yourself for that?
I don't think people have gone more casual. They got casual before COVID. But today, I mean, look at our orders for suits in the UK. They're at an all-time high. How do you explain that? People are going back to dressing. People are fed up of wearing their track pants and t-shirts. They want to go back and live life again. That's why you're seeing exports of this pace. Even domestically, there are 32 lakh weddings. They're not going to go in t-shirts and jeans. They're all going to buy a suit. They're all going to buy a Raymond suit and a Raymond ethnic wear.
If you're walking into a Raymond store, might as well get both stitched. Why do you want to go to another?
True, save on the petrol.
Yeah, exactly.
Sir, I'm Aspi. I wanted to know why you want to go for an IPO and not demerge it like what Mukesh and Anil Ambani did when the two brothers separated. Because you'll increase your expenditure for nothing. IPO, 10% of the amount raised goes as expense. Whereas in case of a demerger, there'll be hardly any expense. And again, merchant bankers
IPO of what?
go for an IPO.
One sec.
Yeah.
The company is already 100% subsidiary where we're going for an IPO.
No, but what is the reason for IPO?
One minute. If you let me answer, I'll answer your question.
Yeah.
It was demerged 5 to 6 years ago. All right. It was demerged to try. That time, the same investor was saying that why don't you sell this business? So the engineering and auto business was demerged with the intention to sell it. Today, it is doing well. So I cannot demerge it today. I want to do the IPO, which is an offer for sale, which is my plan. So I can take upstream the money into Raymond and therefore reduce the debt in Raymond, which will create shareholder value.
So, but your 10% of the amount raised will go as expenses, whereas in case of a demerger, there won't be much expense.
I
And
haven't
what-
done the numbers on expenses on this, but the principle is very different from what you're talking about.
Sir, and any reservation for existing shareholders?
We'll talk about the IPO when we come to it.
Okay, thank you.
Good evening, Gautam. This is Sudeep Anand. The question is there going to be a focus on tier 2 cities in the annual in the next 5 or 6 years?
Raymond is already in tier 10 cities.
Oh, that's nice.
650 cities is where we have an exclusive TRS.
Thanks.
Any other from the audience here before we go to the Zoom questions? Okay, Gautam, we've got several coming in on Zoom. One question is, would you be looking to demerge and list any of your business segments, such as real estate?
We'll do whatever is best for shareholder value creation. And at a different time, there'll be different things that we have to do. But we're on a journey and you'll see the milestones as we reach them. But we're on a clear journey of shareholder value creation.
The other question that's come in is with respect to succession planning.
Well, you know, we have a CEO in this group. Succession planning, I mean, I hope I live long, but I think what I'm going to do is I'm going to create companies with the best governance, the best management, the best incentive plans. And, you know, we got to do what we got to do.
Can you share channel-wise outlook for wholesale, retail, and online channels? Can you quantify the number of store additions that we plan to undertake for TRS?
On a minute, you were talking about succession planning. It's for the succession to deal with. It's not for me.
Fantastic. Wearing apparel is a high ROIC business. While we had a first mover advantage, how do we plan to capitalize on it? And what are the corrective steps of taking to improve the growth of the wedding business?
You know, I think the wedding season is very, very strong.
Yeah.
I mean, if I talk to anybody, you call up anybody today, aaj shadi mein jane ka hai. And it's such a good thing to see because the wedding is something that has kickstarted this economy in a way that I don't think anybody understands. I call up people, I'm in Udaipur for a wedding, I'm in Jaipur for a wedding, I'm in Ahmedabad for a wedding, wherever it is, somebody is out for a wedding. I tell people, let's go for 3 days to Alibag, they say, nahi, shadi mein jane ka hai. And I can guarantee you anybody sitting in this room has got invitations to weddings after 2 or 3 years. There's no hall available, there's no infrastructure available, but that is going to kickstart your economy because it's not only going to come on clothes, it's going to come on F&B, it's going to come on travel, it's going to come on everything. So I think this wedding season, maybe there was a pent-up demand of 32 lakh people waiting to get married. The 32 lakh weddings is what they're saying is going to happen. The amount of weddings that will happen, which are not recorded as part of the system, because India doesn't record all its data, could be an exponential number.
The figure we've heard is 3.75 lakh crores of spend from the 4th of November till early January.
That's $50 billion.
Yeah, that's money right there.
That's a huge amount of money.
Yeah.
And that's the tier 1. The multiplier effect of that is something we're never going to know.
Would Raymond be open to investing, partnering with D2C new brands which cater to Gen Z and millennials and largely sell online?
You know, we'll look at every proposal. It's a very generic question to answer, and it's a difficult one to answer. But, you know, we'll again do what it takes to, if it makes sense for the business and if it creates shareholder value. That's our only focus.
Sure. Well, I think interesting questions come in. You partly answered it, but I want to pose it to you anyway, because it'll be more fun to listen to your answer. Question is, can you talk about Raymond Ethnic? At what stage is it at and how will you roll it out? Are you directly taking on Manyavar? I think you answered the last part.
I said, Mama ji to ghar aa gaye. Okay.
Exactly.
See, we are far bigger than Manyavar. So when Manyavar's advertising came, I think it's very childish to try and you please understand something. In this country, being disrespectful to an elder is not on. And whilst you think it might look funny and good, and Ranveer Singh can do this, the trade has taken it very badly. The people on the street have taken it very badly. Mama ji, koi bhi kapde pehen ke aa jaye, mere ko to respect to dikhana padega. That is the value system of Raymond. And if you continue to be brash like this, or you try to take on Raymond, let me tell you one thing. We're not going to sit quiet. Payback's going to be a bloody bitch.
Well said. So what is the wider vision? I think some of the questions that have come in are more your personal vision of Raymond over the next 5 to 10 years. And where would you position that?
See, for me, I can go business by business and get strategy by strategy. But I think at the end of the day, what sits right at the top, which is the only thing I'm focused on, is shareholder value creation. And we want to do, I believe we're the right company in the right place at the right time in the right country. If you get any one of them wrong, it's not going to work. And each business has a strategy. We believe we can deliver on it. And really, it's shareholder value creation. Exponential shareholder value creation is what we are out to do. And you've seen this year's track record. You've seen the last 4 quarters. I don't need to say more.
You've touched upon the export side of the business, which clearly is doing very well, big brands and so forth. Question that's come in is with more to do with Raymond itself. Maybe it's TRS, maybe it's other options of expanding overseas, maybe to the Middle East and other countries. What are your thoughts on that?
No, Raymond will expand. See, a lot of people say, why don't you go abroad with the Raymond brand? I don't buy that theory. I think it's, really good to say my stuff is available on Oxford Street, but it's not going to make money. I see the opportunity in this country, whether it's in any vertical that we are in or any new vertical that we need to open and scale up. There are so many more priorities that we have than to go abroad and expand.
So what that means is in India, you'll be B2C, but overseas, you'll be B2B.
We're B2B overseas.
Right.
And that's where we are playing to our strengths. And they feel non-threatened because you're not coming in competing with them.
I guess we've touched upon your financials, and as we've seen, you clocked the best quarter ever. I know it's a high mark to start with going forward. And I don't want to get too much guidance from you necessarily, but how are you going to sustain the momentum that so many of your businesses have all come together? Real estate, of course, is really cranking out extremely well.
I think it's the energy in the organization today. It's just that everybody is fired up. And I'll tell you something, nothing succeeds like success. The more you succeed, the more your drive to succeed, because you come into a positive zone. I think the whole organization is positively charged today. We were 75, 80 managers. We went to Dubai last week. I took everybody. We had a great time. And there's energy in the organization. I strongly believe in energy.
I want to talk on a personal side, and which is more to do with your fitness. And I know you sort of embody the complete man, but seriously, can you shed a little bit light about how is it that you remain so fit in spite of a grueling schedule?
Well, I think fitness is a priority for me. For me, the first thing in the morning, 8 o'clock, I'm in the gym. Come what may. And I strongly believe that, we're also all growing old. I know at least 5 or 6 people that have passed away this week, 2 of them being under 60. And you know what? If you don't take our fitness seriously, it's not only a disservice to yourself, it's a disservice to your family. They also want you to be around. And, if I put on weight, my wife is a fitness professional, I get a lot of flack. It's my brand ambassador looks like this. So
Fantastic.
it's important. I find time. I work out 365 days a year. No compromise, no negotiation.
Want to go around the audience here and see any more questions from anyone? Yeah, Rupal, please. Mike.
It's really good to know that you're focusing so much on shareholders' value creation. But what about the rest of the stakeholders? Your customers, your dealers, your employees, creditors?
That's my family. I take care of them. I mean, I can go business by business, take real estate partners. We're the only real estate company that took up channel partners to Australia for the cricket. You know what? They're really happy. 17th of January at 7 o'clock, I'm invited 100 of my top customers for dinner at home. 12th to 18th of August, I have 1,200 customers coming for a week to spend with me. We take care of everybody. We have vendors meets everywhere.
Thank you. Good to know.
The other question that's come in is with respect to your real estate business again. And can you shed a little bit light about the kind of interiors that you're using, the people you're using, who's doing your construction? Just want to get a little color on that, the kind of companies and the vendors you're using.
So we're going with the best. So our architecture is done by Hafiz. The construction is being done by Capacity. And we build relationships with everybody. You know, Raymond, let me give you an example. There was a textile company, just to let you know, and everybody knows the name. I don't want to spell it out. That spent $1 billion over the decade to try and compete with us. And eventually, they tried every trick in the book. What did they lose? Raymond has relationships, and Raymond is built on relationships. You can do what you want, but you'll never be able to break my distribution network. There are people who have worked here for 3 generations and 4 generations, and they have gone on to become multi-billionaires, but they still work with the Raymond family. And the biggest barrier to entry in this business is my relationships with my trade. And that you can't break. And that's what we built in the real estate business. That's what we built across the board in all our businesses. Let me give you an example like Suryakant Jaipuria. His father, Chunilalji, was with us. He's with us. His son is with us. His grandson is with us. If somebody comes and says, I want to do 20 lakh rupee worth of business with you, he's not going to go. Take the Prestige Group, Noman and Irfan. Noman started with Raymond. Look where Prestige is today. But Noman still is a Raymond franchisee. Because he's got that passion. Take Gautam Jain in Hyderabad, who's gone on to make Pokharna granites. But he started with Raymond. So these relationships you can't take away, not for money. And these people are opinion makers in the trade. They're not going to go because people say, hey, these guys made you, where are you going? And they will not let anybody else go.
I believe on the real estate side, you've said that you'd like to remain within the state of Maharashtra. Why is that? I mean, some people have gone.
One political system, one bureaucratic system.
Makes perfect sense. Yeah, others have gone nationwide or regional wise, and I think they've had mixed results. How much do you think real estate would contribute to the overall business in terms of revenue 5 years from now, or a percentage, rough percentage of the group?
I won't give you a number, but I think it'll be a significant part.
Okay. In terms of capital investment within the real estate business over the next 3 to 5 years, do you have a number you want to share?
Like I said, it's not going to be a number.
Yeah.
And it's not something that we're not going to be able to fund with the cash flows that we have projected.
Sure. Will these cash flows emerge basically from the group or within the real estate P&L itself?
The real estate itself will do well enough to manage its cash flows.
Wonderful. And also, please share your key learnings from the last management change cycle that didn't quite execute as expected.
Well, I guess, I should have, I had a big advisory board. I left it. I thought professionalization was supposed to be in a different way. I had a very strong advisory board and I left it a lot to that. And, I learned from my mistakes. I think I'm doing it differently today. Yep. And it's obviously showing some results. And I think, I'm very passionate about what we're trying to do today. And, when you get even small successes and small wins, it motivates you that much more. So that's why I'm so driven today in what we're doing. And I can tell you, the bus has left the station, but it's only reached the first station. Destination is a long way away.
Absolutely. In fact, I do know that even the Dabur, the Burmans didn't quite succeed the first attempt. And then, of course, have done very well ever since. But I think that's a great perspective. We do have time for one more question. If somebody's out there, either on Zoom. Yeah, please. We just get you a mic. Sorry. Yeah, go ahead.
So 20 is what we've done now. And slowly, eventually we have to do the whole thing. It's just that I haven't announced what's going to happen when. But as a company, we have to skin the whole land in the fastest pace possible. See, if I had to tell you everything today, you won't come the next time I call you. Thank you.
With that, I want to thank Gautam for spending his valuable time with us. We have tea and snacks, so please stay back. Do spend time with Gautam, and if you
I'm
have any
happy to
further-
answer any questions.
Thank you again. Thank you very much.
Thank you, Gautam. Thank you.